Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow is Fed Day, but before their decision at 1 p.m. Central Time, where they're expected to cut rates by at least 25 basis points, we have a lot of data ahead of that. But first, what we had this morning, first we saw slower than expected French GDP and overall underwhelming consumer and climate data coming out of the Eurozone. The dollar index is holding against that resistance level, about 97.75, 98 and a quarter, a big area. The same way the euro is down at 112. It's been as low. It's starting to base. We talked about it yesterday against that big major three-star support we have, about down at 111 and a quarter up to 111 and a half. So we're seeing a little bit of move off of there in the euro, but a lot of overhead resistance. Just about 112.20. We have first resistance, and you got a lot of stronger resistance up there, about 112 and a half, 112.70. So there's a trend line there as well. Look at that in the euro. As we consolidate ahead of tomorrow, you had a lot of data here for the U.S. Couldn't really move the needle much on either way. PCE, core PCE index was just below estimates at 1.6%, looking at 1.7%, and that's below the Fed's target. This is the Fed's preferred inflation gauge, and their target is 2% on inflation, so we're below there. This supports a path for them to cut rates. At the same time, consumer confidence. Strongest numbers we've seen since going back to September of last year, October of last year, when the Fed was on autopilot on hiking. So, the consumer is alive and well. Consumer spending's been good, retail sales has been good, and we believe we're starting to see the data turn a corner and get a little better coming out of a slower quarter one, and then we start to see that happen usually in the late spring. But overall, the government shutdown could have pushed that back a little bit, and that's why we're about 30 days to 45 days off from starting to see some of that good data. And we could see that in August, and that's why we don't think the Fed is going to cut at the pace that's expected, and this is overall going to be supportive to the dollar over the next 30 to 60 days, so keep an eye on that. But moving into tomorrow is the Fed, and we expect it to be dovish, potentially though just a little less dovish than everybody is really pricing in right now. Big numbers tonight, though, coming out of tonight. Chinese manufacturing PMI is going to be closely watched. That's going to be a big one for overall risk sentiment. It's going to move the yen. The Bank of Japan did meet last night, and they stayed steady, but they said they're ready to act. It's really what they've seen, or you've seen from the Bank of Japan over the past few months. What ammunition do they have at this point? I mean, they own so much into the ETF market, 75% of ETFs. They own a large number of shares, a large portion of some of the top 10 holders of, I think, 50% of the companies in Japan. We noted that last night in the FX Rundown. So the Bank of Japan doesn't have a whole lot of ammunition to move here, but if things worsen, they can. Just kind of here we're seeing the yen hit off some strong support. It is holding well. They clearly weren't more dovish than expected, or they're really right in line. So 92 is our major three-star support on the yen. Watch it as it's trying to base. I mean, if the yen can hold 92, then we remain in what is an uptrend. It's been an uptrend this year, so we can remain in that uptrend. But if we close below 92, the next stop, you have some longs that are going to liquidate. The next stop would probably be 91. So if you're a buyer here and this thing starts closing below 92, make sure you're managing your risk. And then moving on, the Aussie dollar is lower again today. Building approvals were awful last night. Tonight you have CPI data coming out of Australia, but more importantly is that manufacturing PMI coming out of Japan, coming out of China. Remember, China is Australia's #1 trade partner. If we see better data coming out of China, decent CPI number from Australia, you're going to see the Aussie trying to recover a bit from oversold territory. It is an oversold territory. You have a tremendous amount of support down here. This has been a rare major 4-star level of us, very wide range, about 68 all the way up to 68.60. So a lot of support down here. Keep an eye on that. And then looking at the Canadian dollar, we like the Canadian dollar. We are bullish the Canadian dollar, and as long as it remains constructive, and constructive is staying above 75.60. And we sort of pinged that. We talked about it yesterday, the FX Rundown. We pinged that coming into Monday, and then ultimately we're holding ground well. GDP data tomorrow out of Canada. Raw materials purchasing index as well. Watch that closely. If we get better data ahead of the Fed, before the dollar index, the dollar itself starts to strengthen, then we get good data out of Canada. Could see the Canadian dollar make a little run early, potentially. But overall, the landscape has been quiet as everybody was waiting for the Fed. Tomorrow, give us a call. We're here to talk about anything on the board at all. We have a lot going on in the bonds. We put out a bond trade, and we think that a less dovish Fed is going to be bearish on the bonds. And we're not somebody that has been talking and beating a bearish drum on bonds. We've been very, very bullish the bonds since the start of 2017, and very bullish. So we're looking for a counter trend trade here. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.